track record is good for that particular client, then this seller will give financial services to the client based upon the percentage. The percentage may be it may be a different percentage, so based upon the amount the percentage will be different. And for that, the customers, if they are regular, if they are having a good reputation in the market, then this financial services will be provided by the seller to the client here. So whenever the need arises, he can get the financial services from the dealer or from the supplier or from the seller, or whatever the name we can call, like those will be same. And next, suppose like after getting the amount also, what these people have to do, these people have to make the payment in time. So whatever the amount they have taken from the suppliers, they have to make the payment in time, so that again in the next level, if they have any problem, again they are going to get the payment. So always they have to make the payment in time, and they will be eligible to get the financial services. So this is regarding the financial services. Next one is collection services. So what do you mean by collection services? Collection services are nothing but what? Suppose this collection service will be given by the agent to the client here. So whatever the amount he has to whatever the amount has to be get from the client, the agent is going to collect, and he is going to play an important role in this. Suppose in case of his absence, like if agent is because of some situations, if he is absent, he cannot able to perform the task. So now here it is a responsibility of the client that the collection should be directly given to the seller here. So the client he himself has to collect give the amount to the seller, and he has to clear all the dues, whatever pending, whatever the dues are pending, that he has to pay to the seller here. So here the collection services will be on both the persons, that will be on the agent and another one will be on the client here. So these two people will play important role under collection services. So in the case in the absence of this agent, then the client is going to perform this task. And the next one is credit risk services. So what do you mean by credit risk services? Credit risk services are nothing but what? In the absence of the factor, the entire credit risk has to be borne by the client himself. So same in the previous point also I have repeated the same point. So here also, in the absence of the factor, that is agent, here the client has to take the risk, take the credit risk, and he has to perform the task here. Bad debts eat away the profits of a concern, and in some cases it may lead to closure of the business. But once the factoring relationship is established, the client need not bother about the loss due. Bad debts, the factor assumes the risk of default in payment by customers, and thus the client is assured of complete realization of his book debts. Even if the customer fails to pay the debt, it becomes responsibility of the factor to pay the amount to the client. It is greatest advantage of factoring. So now in case of, if the customer is not able to make the payment, it is the responsibility of the agent that he has to make the payment to the client here. Okay, so now if he is not able to make the payment, the agent has to make the payment. He has to take the credit risk, and after later period he can collect from the customer here. So now we will be acting on behalf of the client, on behalf of the customer here. So from both the sides is going to take responsibility of the credit risk. So that is the meaning of credit risk service. Next, provision of expertise, sales, ledger management service. So now the name itself is indicating that provision of expertise, sales, ledger management service. That is what? Administration of sales ledger is purely an accounting function which can be performed efficiently only by few. In fact, the success of any organization depends upon the efficiency with which the sales ledger is managed. It requires a specialized knowledge which the client may not possess, but the client can receive services like maintenance of accounting records, monthly sales analysis, overdue invoices analysis, and customer payments statement from the factor. Besides, he maintains a contact with customer to ensure that they repay their dues promptly. Thus, it becomes the factor responsibility to take care of all the functions relating to maintenance of sales ledger. The factoring offers an excellent credit control for the client. So here, suppose that particular client, they don't have particular knowledge about all those things. So what are the amount is spending regarding the sales ledger, regarding the books of accounts, regarding the transactions, regarding the invoices. So here I told you, on behalf of him, the agent is going to play an important role and is going to take the responsibility of that particular things which are involved in that particular business. So that is the meaning of provision of expertise sales ledger management services. So the sales ledgers are to be maintained by the factor on behalf of the seller here, that is client. Okay, so next is consultancy services. What do you mean by consultancy service? The services which are provided by the consultancy will be known as consultancy services. The factors are professional in offering management services like consultancy. They collect information regarding credit worthiness of the customers of the client, ascertain the track record, quality of portfolio turnover, average size of the inventory, etc., and pass on the same to their clients. It helps the client avoid poor quality and risky customers. So here agent will act as a consultancy here and is going to get the information of the customer, and after getting the information of the customer, he is going to give the particular information to the client, that is to the seller. So now based upon their track record, he is going to decide whether to continue the business with that particular customer or not. With the help of consultancy services, he'll come to know. So after getting the information, he'll decide whether to continue the business with that particular customer or not. He'll see. So this complete information will be given by the agent to the client here. Next, economy in servicing. Economy in servicing is nothing but what factors are able to render very economic service to their clients because their overhead cost is spread over a number of clients. Moreover, their service charges are also reasonable. Factoring is cheap source of finance to client because the interest rate is charged only on the amount actually provided to the client. Say for instance, 80% of total invoice and not on the total amount of the invoice. Thus, clients are able to get factoring services at economic rate. So they have to follow the economic rate. As the economy is giving the particular percentage, the same percentage they have to follow. They cannot increase or they cannot decrease the percentage as they want. So always they have to follow the economy services which are provided by the economy. So they have to always when they want to be in the market, when they want to continue the business in the market, they have to always follow the rules and regulations which are levied by the economy. So those services which are rendered by the economy will be known as economy in servicing. And the next topic is off balance sheet financing. Off balance sheet financing is nothing but what? So at the end of each year they have to provide a financial statement, right? The financial statement is also known as balance sheet, right? So now with the help of the balance sheet, they'll come to know the clear picture of their financial position, whether they are getting the profits, whether they are getting the losses. So based upon that, if they are getting the profit, they are going to continue the business. If they are getting the losses, what decision they have to take, only they can do with the help of balance sheet here. So now here in this case it is reverse. So here they are going to give off balance sheet financing. Off balance sheet financing is nothing but for for every 6 months or every 1 year we have to prepare a balance sheet, but in this they are not going to prepare any balance sheet. So after the period is over, after complete details they'll get it, then only they are going to prepare a balance sheet. So from starting to till ending they are not going to do anything, but at the end of the period, so before the due date, they are going to prepare a balance sheet. So that is called as off balance sheet. So off balance sheet is nothing but what? From the starting they are not going to record anything, At the end of the peak moment, they are going to record the transaction. They are going to submit that balance sheet into the bank people or to the auditors or to the CA people. Then they'll come to know the clear picture. But in that also they have to provide a genuine information. They cannot show the false information. So even though they'll provide the information at the end or the peak of the moment, they have to provide a complete information. So that is the meaning of balance sheet financing. And the next topic is trade benefits. Trade benefits are nothing but what? Suppose like this seller is having more profits, so every year he's getting more profits. He don't want to show in the books of account, because if he shows these things in the books of accounts, he has to pay the tax to the government. So to avoid that, what this client will get, he is going to get a trade facility here, that is trade benefit. So now here, what if the profits he's getting, apart from his investment, suppose he has invested some 5 lakhs rupees, but at the end he has got some 10 lakhs rupees, so he don't want to show complete 5 lakhs as a profit, he want to show only 2 lakhs. So that 3 lakhs he can invest amount into the trade market, that is share market. So with this, if he is going to invest such an amount into the share market, he cannot pay any tax to the government. To avoid that, he is going to pay, or is going to invest such an amount into the share market. So that benefit is having as a client, and is going to invest such an amount into the trade share market. So like what are the profits he is going to get, he don't want to show the profits. In that, half of the profits he'll show, and half of the profits he want to invest into the shares to avoid the tax. So that benefit as a client is going to get. So that is called as trade benefit. At last, the last point is miscellaneous services. So the name itself is indicating that the miscellaneous services. So let's see what is this. Generally, factors are able to computerize their operations fully, so they are able to promote services at reasonable rates. They spend more on MIS analysis. They also build bigger credit library of debtors by means of collecting information about new debtors. So now miscellaneous services is nothing but what? So whatever the information they want to get about the debtors, they want to get about the customers. So that getting the information of the debtors and the customers will be known as miscellaneous services. So here agent is going to perform this task, and is going to get the information about that particular person or the people, and that information will be submitted to the client here. So with the help of agent, he is going to get the benefit of miscellaneous services. So for this miscellaneous services, agent is not going to get any percentage. The free of cost is going to do, and he cannot ask any amount for that miscellaneous services. Only the benefit will be gained by the client here. So this is regarding the benefits of the clients. So next topic I'll continue in the next video.